Hello and welcome to Crypto Weeklies. In this video, we dive deep into Ethereum and its token ETH. None of the content is financial advice. We'll be discussing the machine learning based price forecast, regression analysis, as well as estimated bull run target. Let's get started. It's no secret that in this market cycle, especially since 2021, ETH has not performed that great. But if you look at from a Fibonacci retracement perspective, from its previous all-time high at around $4,900 to the bear market bottom at around $880, the lows that ETH set back in June 2022. Since then, over a longer period of time, ETH did have uh, a series of higher lows and higher highs, which got broken sometime in late February of 2025. Since then, token has been in a free fall. From those bottoms that it series of higher low bottoms that it held for essentially 2.5 years. um, so from that point in time, the price has gone down from $2,800 to now at almost $1,000 less, at around $1,800. So if this $1,842 level is held, that corresponds to the 0.23 fib level. That could bode well for ETH if it manages to do that. The 21 week exponential moving average is almost $800 higher than the current price at around $2,600. The 20 weeks simple moving average is at around $3,000, almost 11 to 1200 higher than the current price. That means ETH has observed a steep decline, and the momentum for ETH at this point in time is kind of bleak. You can see that from a narrative perspective. Again, the analytics that we are conducting available on cryptoweeklies.com for free. You can see that from a narrative share perspective, ETH has some attention space based on the discussions, but surrounding most of them are surrounding to Bitcoin and some of the other Bitcoin related narratives and stablecoin related narratives. ETH definitely lacking at this point in time in terms of narratives. And also, if you look at the risk, normalized risk, again available on under SMA risk. The first chart we looked at, the narrative word cloud, is available over here, gets updated every day. The risk model, this is the BTC risk based on its simple moving average, and in increments of 20%, whereas ETH risk has always stayed lower than Bitcoin risk since about when 2024 began. That is because ETH has underperformed this cycle, even against, if you look at Bitcoin. This is the return, and you can see back in December 2020, 8th of December of 2024, the price of ETH barely went close to that 4,000 level, which is the 0.786 fib level. If ETH has one more leg to the upside to that same 0.786 level from here, that would correspond to a price appreciation in terms of percentage. If it rallies to that point, that is at around 120%, that is 2.2x from the current price. In terms of price appreciation, it's at around $2,200 from its $1,800 current price. So if we now focus our attention to the machine learning side of things, now understanding that right now ETH SMA risk is less than 20%. Again, some of the best time to DCA per this model. Again, whenever price of the risk associated with ETH is lower than risk associated with Bitcoin. Again, this is not a good example over here in 2021. Although the risk for ETH capitulated, the risk for Bitcoin was lower. Again, as Bitcoin is more popular than ETH and has a considerable market and mind share, again DCing ETH as an opportunity cost, everything being an opportunity cost only, per my estimation and analysis, only makes sense when the risk for accumulating ETH is lower than accumulating Bitcoin. Again, and this has been essentially true since about September 2016. But again, the corollary or an addendum to it is that whenever risk for accumulating Bitcoin or ETH are in an uptrend, that means and from a risk perspective, accumulating when the risks are elevated, let's say at around more than 60% or 80%, again does not make that much of a sense, because crypto as an asset class is very volatile, and it spends only a handful number of days in those elevated risk levels. Again, let's say if the cutoff is 60% risk, accumulating above 60% risk again makes very little sense, because again everything does eventually mean revert, especially with historical data available for multiple years. Let's say again, from that perspective, ETH started becoming lucrative when the risk levels fell in this green zone, essentially since January 27th of 2025. So that is the price of ETH in January of 27th of 2025 was again below this 3000 level, coincidentally below that point 5 fib level. So all in all, in confluence with most of the analysis again, and if you go even lower, lower in terms of risk reward, better risk reward, that is when risks are lower than 20%, again Bitcoin risk is slightly higher than 20% or close to it, whereas ETH is at around 12% risk. So especially when ETH risk went below 20% in coincidentally 27th, this exact same date, but only one month later in February 27th, you can see the token has been in a free fall from that point in time. If you look at the week of February 27th, that happened somewhere over here, between again this week ended in February 24th. So this candle, the huge candle which took price down from about 2500 to at one point less than or close to $2000, so again a $500 drop, also coincided with this risk for ETH going down at the best possible time to DCA per the model. Again, this is the machine learning forecast for ETH over the next 6 months. The base case is this pink line, which says that all things equal per the model, price has a higher likelihood of going up with time than lower with time, and that is again evident from a longer term perspective. ETH since about 2018 has trended higher with time again. Even the series of sideways action in a broader perspective, you can see that price is nowhere close outside of this range. Again, the range for ETH being between roughly speaking 11-1200 dollars to about $4000. So that in that range, price has traded for a prolonged period of time, essentially since about if we go back, January 2021 would be the first time, so more than 4 years now. If we look at the bull case in a non-euphoria recovery for ETH over the next 6 months, the 68th percentile bull case per the machine learning model, price between $2100 and about $3300, and again coinciding with the 0.618, which comes at around $3696. So that's how per the machine learning model the price could go in the next 6 months, using techniques such as seasonal ARIMA, LSTM, and XGBoost. If there is a continued downturn in the market, in the next 6 months, the floor for ETH per the model could be between $1200 and $1800. We are close to that $1800 level right now. And again, this model, or the purpose of this model, is not to tell what has to happen in the market tomorrow. That is exclusively determined by market forces, macro and micro, and the assets pertaining asset particular narratives and the price movements. But this model does help identify if the market were to go up, how high can it go with respect to the probabilities, confidence levels, and also machine learning based historical data analysis. So to identify the directionality, the pink line does identify, and if you add all of that and weight it in terms of the market cycle theory, you could make a case that all things equal, there is a higher probability for a recovery, especially in a post-halving year. But again, there is always a downside risk. So this is kind of, and if there is a blow off top, or sorry, not blow off top, 2 standard deviation or a euphoria case for ETH over the next 6 months, per this model, the price could be somewhere between $2300 and about $5000. A $5000 ETH is higher than that previous all-time high per the last market cycle analysis. And if we go slightly higher, that 1.618 comes at around $7400. Again, that is kind of out of reach at this point in time. That would take the price to go to that parabolic drop, which is a 99.7 percentile bull run. Again, only a 0.3% chance, that less than a third of a percent chance that price goes above that per the machine learning model. That case for ETH is between $2500 and roughly speaking $7,300. So at this point, entertaining those thoughts with this downward market cycle or price trajectory for ETH does seem outlandish, but again that is still within the scope of a 3 standard deviation bull case. Somewhere between the 3 standard deviation and the 2 standard deviation, that could be an eventual peak for ETH, per my understanding of the market, between $5,000 and $7,200. If you take a midpoint, that could be close to that $6,100 level. Again, provided if there is one more leg to the bull run. If not, if there is just a recovery to a lower high, the price for ETH could be somewhere between $3,300 and $5,000. Taking a midpoint of those two levels, again 3.3 plus 5, again 8.3 divided by 2 would be at around $4,100. Roughly speaking, if we again focus our attention to the regression based fair value for ETH, that comes around 4.3k, eventually close to that target between the 1 and 2 standard deviation. Price prediction, again this polynomial regression based fair value helps identify if ETH has gotten attractive with respect to its fair value. Again, if you are more risk averse, as you should be, again in crypto where the assets are volatile, accumulating below one standard deviation residual applied to the fair value, again this green line does help identify some of the value zones for ETH. Again, that currently is at around $2,600 or $2,691, roughly speaking $2,700, and in an increasing fashion. So accumulating per this model below $2,700, providing that ETH is a high quality asset and has one more leg to the upside with that hypothesis, is definitely not the worst idea, historically speaking. Whenever the price is below this green line, if there is a mean reversion trade, even if price goes back to the fair value, that puts ETH somewhere at around $4,300 again. And as I analyzed previously, that if in that environment, again that $4,300 roughly speaking comes somewhere at around 150% at or 2.5x from the current price. So on the other hand, if the prices have one standard deviation ceiling, that is again close to that $6,600, a non-euphoria regression based ceiling at around $6,600 for ETH, and a $6,600 ETH is more than a 3x from the current prices. If going slightly higher, if the 2 standard deviation, again this is quite outlandish at this point in time, because even in the last bull run, prices barely touched that 2 standard deviation residual applied. So at this point in time, that corresponds to about 11,000 level. Again, kind of out of scope at this point in time. As ETH does recover, we have to take stock of how that recovery is happening. If it's a V-shaped recovery or resolution to a lower high, that would help and enable analysis on those topics. Right now, again definitely the areas to look for is if the price has a chance to go back to this 1 standard deviation residual, or if it touches the 2 standard deviation residual. That kind of is a support for ETH, again has held in June 2022. The last time price was below the 2 standard deviation residual, the dark green line I'm referring to, was back in March of 2020 during the March crash. Right now that valuation for ETH comes at around $1,665. If prices stay meaningfully above that price action, again this chart getting updated every week, this trailing support holding, then the second level to watch is 1 standard deviation residual at around $2,700 and the fair value at around $4,300. So those are the 3 levels of interest for now for ETH. In terms of the simple moving average based risk, again we saw that in this is essentially the same chart. If you look at ETH, this chart, this 20-week simple moving average chart, again this is slightly differently calculated, but is in essence it's the same chart how the price is doing with respect to the 20-week moving average, and based on that relationship the risk levels are identified and color coded between 0 and 1, in terms of the cooler colors such as purple, blue and sky blue till about green. The risks are low. When the colors change to about yellow, orange or red, that's when the risks are high. Back in March of 2024, risks were 75%. In the December 2024, risks were at around 63%. Right now, per this model, risks are less than 20% at around 12%. accumulation risk. If the hypothesis is that accumulating below 20% risk for ETH, um, again over a shorter period of time, again there is a counter trend rally over there, even in the drop. After that there was a big rally from this June 2022 bottom. If that kind of, and even if you want to go lower, less than 10% risk, again that happened sometime in early March of 2025, when the risk levels were at around exactly at around 10% on 13th of March. Right now, with the 12% risk, again the opposite of that is um, overvaluation related risk. Again, over here, if the hypothesis is that in the next leg, the risk levels at least go to the between the 50 and 60% risk, with that uh, green colored territory. Again, if that's a lower end of the risk target for any counter trend rally for ETH. Per this model, the price at around 50 between 50 to 60% risk for ETH could be between $4,100 and about $4,400, confluent with the fair value. Again, a run to fair value per the regression analysis takes ETH per the model at around 4,300. The regression based fair value that we just talked, this is applied at a daily level instead of a weekly candle, and per this model the risk for accumulation is at around 9%. That means one of the better times to DCA per the model. Again, I'll get rid of some of the intermediate risk levels to identify two things. First is what could be a price at that point in time. Again, if the prices go back to the uh, close to the fair value, or the 50% risk, that this green zone that we analyzed earlier, and also identify some of the bottoms for ETH using this less than 10%. Again, this model did a great job identifying 1, 2, and potentially now the third bottom pattern for ETH over the course of since 2022 bear market for ETH began. If let's say the hypothesis for ETH is that prices to eventually go to that between 50 to 60% risk level, per this model that could correspond to price between 6,400 and 6,450 and 7,300. Again, the higher end of the forecast, the 3 standard deviation case, if you will, per the machine learning based price model. That's the forecast for ETH per the DCA model. Again, we have a composite of all the model at the end. The time weighted average price risk says that again this model did a phenomenal job identifying the bottoms as well. Whenever the price is sufficiently close to the blue line or slightly under the blue line, like ETH was back in July 2022 and November 2022. Again, we started the channel and started covering ETH in 2023. We have made several videos related to ETH over the course of the bear market on the channel. Again, you can see over here a lot of retirement related views when the token was heavily undervalued, and in the course of the bear market. So if you are interested, you can give us a like and subscribe to stay connected. Again, right now the risk levels, or time weighted average price risk levels, have also gone down at around 20%. So if we take an average or estimated risk reward based price target for ETH, that takes again this is a more outlandish prediction. Again, this model has assumptions that all the three risks kind of top at around 100% all at together. Right now the weighted risk is at around 14%. If we say that and with the current price at around $1,800, if we say that the peak could be between 50 to 60% weighted risk, that means from 15% weighted risk, that is again and 3x from the current, or 3.5x from the 1850 price action. If you do a 3.5x of that 1850, that takes ETH somewhere close to, again let's type it out over here, 3.5 into or multiplied by 1850, which is the price of ETH. That takes ETH from a machine learning based risk reward price forecast at around $6,500, which was a level which was confluent with the DCA based targets as well. And with that, I would like to conclude the video. I hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.